Prepare profit and loss account from the balances of Mr. Kandan for the year ending 31st December 2003. We have office rent, printing expenses, tax, insurance, advertisement, gross profit, then salaries, stationeries, discount allowed, traveling expenses, and discount received. All these have to be shown suitably in profit and loss account of Mr. Kandan for the year ending 31st December 2003. So let's get into the structure. So here we have profit and loss account. Let me add the name. Here we have profit and loss account of Mr. Kandan for year ending 31st December 2003. So let's go to the question. So ensure you have this format, debit and credit. You can also go by vertical format, in which case it will be a little different. Okay. So what are the information we have? We have office rent, printing expenses, tax, insurance, advertisement. All these items will appear on debit side. Of course, what about the gross profit? This is something which is transferred from trading account, so that item will appear on credit side. Okay, so first let's capture that by gross profit. So let me put it, gross profit amount was 2,50,000, right? Then we have office rent, say the first expense, we have office rent. Let's capture that. So that should appear on debit side. To office rent, what was the amount? We have 30,000. Then we have printing expenses of 2,000. So to printing expenses 2,000. Then we have tax, insurance 4,000. To tax, insurance, it's 4,000. Then we have advertisement 36,000. To advertisement 36,000. Then we have gross profit, which was already covered. Then we have salaries, right? We have salaries, so we'll say 2 salaries. What was the amount? 80,000. Then we have stationaries 3,000. 2 stationaries, the amount is 3,000. Then we have discount allowed 6,000. So 2 discount allowed 6,000. Then we have traveling expenses 26,000. So 2 traveling expenses, it's 26,000. Then we have discount received, which is a non-operating income, okay, or it is something related with your purchases, so it should appear on credit side of your P&L. So let's show that by discount received. It is by discount received, and what was the amount? It was 4,000. So now let's total. I think on credit side we have a higher amount. So let me do the totaling. The total works out to 2,54,000, whereas on the debit side the total, say it is 1,87,000. So let's pick up this. So here we have a difference of 2,54,000 minus sum of all these items. So the difference is 67,000, right? So this difference is nothing but net profit. To net profit, and this will be transferred to what is known as capital account. So in this way we have captured the net profit and we have prepared profit and loss account of Mr. Kandan for year ending 31st December 2003.